Welcome back to Trading Hour. Well, while the benchmark indices, the mid-cap and small-cap index are seeing selling pressure, select stocks are witnessing some buying emerge from the day's lowest point. Names like Berger Paint, PI Industries, Abbott India, some of these stocks are actually doing quite well, even in what is essentially turning out to be another very lackluster session. MGL was the other stock that's doing quite well. But we are now shifting focus to the energy space. Think Gas is a leading player in this Indian city gas distribution industry. The company's CGD network supplies compressed natural gas for use in vehicles as well as piped natural gas to domestic households, commercial establishments and industries. Manisha Gupta caught up with Abhilesh Gupta, Managing Director and CEO of Think Gas, from the sidelines of the India Energy Week and began by asking him about how gas aligns itself with India's gas aspirations.
What was missing from the perspective of taking our gas share from 6 to 15%, we feel that the missing link was the last mile connectivity. While you have LNG terminals, you have the trunk pipelines available. Of course, we need more trunk pipelines, but ultimately the missing link was that gas has to reach to the end consumer. Gas has to reach to the household, each of the household. There should be multiple CNG dispensing stations. There has to be pipeline reaching to the industrial customers and the commercial customers. So in Think Gas, this is where we came and tried to fill the gap. And we have done very significant development on infrastructure. And we have laid around 1,700 kilometers of steel pipeline, almost 10,000 kilometers of polyethylene pipeline reaching to some of the household as well as the industrial customer. And we have set up 470 CNG stations. Along with that, we have also set up 19 LNG stations also. So we feel that this infrastructure, which is now ready to serve the customer, will support the vision of taking the gas share from 6 to 15% going forward. Of course, there will be some more support required from the government on the policy front to see that how do you manage your logistic costs much better, how do you have better tax optimization, etc. But having infrastructure reaching to the last mile connectivity is something which we have delivered. We are looking to deliver it in much better manner going forward with the brand merging now. And this is where I see that our contribution to be there to increase the gas share.
Since you did mention on policies and you've also clarified the areas where you see better policy support from the government, what is it that you're actually anticipating or asking?
Yeah, so actually gas have been developed in the very select cities going earlier. Very few cities had the gas network, or also some part of India had the gas network. So the policies were framed, but probably they were not required to maintain the proper tax optimization which is possible, because gas is flowing from one state to another state. I think this time has come where we have to really see that how the tax optimization happens, because natural gas is not under GST. If it's not under GST and we are unnecessarily lumping tax one another on the one state, another state, and then the third state and fourth state, that creates problem, and ultimately the gas cost increases. If the gas cost increases, the end customer is not going to get the benefit which he is entitled to get the benefit of. This is one area. The another area that you can come up with some kind of more forthcoming discussion to see that the logistic costs are minimum. When you need where the gas you need, the logistic cost should be minimum, so that ultimately the end cost of gas is also real. So there is a lot of scope of that. So there the sustained dialogues are required with the regulatory authorities, Government of India, and we see that with this itself, the gas cost can be reduced by 20%. It's very significant.
I was actually coming to that, the cost efficiency part of it, and as you said, there is now a target to take it from 5 to 16, and we're talking 2030 right now. What more will need to be done in that direction?
I think one important part is that we have to see that in the entire value chain of gas, the cost at each value chain has to be optimized. Today, there are persons who are importing natural LNG. There are trunk pipeline operator, there are LNG terminal operator, and then there is a distribution company like us. Each chain, everybody has to look at how do we optimize the gas cost and how do we increase the volume, rather than earning or trying to recover the infrastructure cost from a limited pool of gas, which is 6% today. If we try to increase the gas share and the gas reaches to 15%, pool becomes bigger, the infrastructure recovery happens much faster, and overall gas cost has to come down. And if the overall gas cost comes down, and consumer will willingly going to take and start using the gas, then the regulation which force them to use the gas. So I think this is something which is very, very important for gas sector to grow, apart from more infrastructure development, which we are doing.
Yes. You've also had a tie-up happen with AG and Pratham. What does that bring to table for you and for overall system as in whole?
So we were earlier operating under two brand names. One was Think Gas, which was primarily operating in the northern part of India. Another one was AG&P Pratham, which was primarily operating in the southern part of India. So while the shareholders merger has already happened in last year, now we wanted to merge both the brand also.
Okay.
So every employee, every stakeholder, every customer see it in one brand, one umbrella, and we work in tandem to look at that. This is our ultimate goal is. So we have merged the brand today. So there is one brand which has Think Gas, but we have taken color from AG&P Pratham.
Okay. As we move ahead from here, and there's a lot happening in the international markets as well, in sense of queues now for the energy markets. You've spoken about India, yes, but what is it that you see as impact coming in from the global queues?
I think it's important that while we see very clearly there is a maybe 6 month, 1 year delay, but we clearly see that a lot of LNG will be available going forward. And India has to be ready when LNG is available at an affordable price going forward. We have seen earlier also when the LNG price dropped to $3.50, but we were not ready with respect to infrastructure to use $3.50 gas. And we still remain with the same kind of import which was happening when even the LNG was $16, $17. So I think it is important now that everybody focus and develop the infrastructure to reach to last mile. While government has done its bit and the regulator has awarded all these areas already to city gas distribution companies, time has come that we develop infrastructure at a faster pace and we take advantage of this situation, and the window is very short. So we have to work together. But we clearly see as such, and then more or less consensus that gas prices are going to remain in affordable territory going forward.
Okay, on that note, we're going to step into a very short break, viewers. Don't go anywhere. After the break, we'll put the spotlight on Persistent Systems and find out why it's buzzing in trade.